Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Verizon is one of the top dividend stocks on the market with a yield of 6.9% as I'm recording. The PE ratio is under 8, and I think there's a really good case to be made that this is a great value stock. That isn't to say that there isn't risk here. There is a lot of debt on the balance sheet. But one of the things I think investors need to focus on is where the company makes its money and how that money-making engine is growing long-term, because I think Verizon has a brighter future than you may think right now. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all of my content. And check out fool.com/rive for the Motley Fool's top 10 stock picks right now. To highlight exactly what's going on with Verizon's business and where you should be focusing as an investor, let's look at the income statement and some of the company's key metrics in its two biggest businesses. I want to start here with the income statement, and this is a look at the results for the final 3 months of 2022. That's what the columns on the left-hand side, and then the two columns on the right-hand side is 12 months of 2022 and 2021, and the changes in revenues and expenses in both of those time periods. The biggest thing to note here is on the operating revenue side, you can see that service revenue and other, that's really the wireless revenue that Verizon is generating from people paying their monthly bills for wireless services, growing 3.3% in the last quarter. That's pretty solid, actually down a little bit for the year. What I want you to notice here is the cost of that service. So the gross margin overall of the services revenue is 74%. That means for every dollar that people pay for their Verizon bill, 74 cents of that is profit. You can cover operating expenses or flow to the bottom line and be net income and be paid out to shareholders as a dividend. The other segment of the business is wireless equipment revenue. That's selling phones and other equipment for people who get Verizon services. But you can also see from a cost perspective, it costs more to sell every piece of hardware than Verizon makes in revenue. So the gross margin for the hardware segment of the business is actually a negative 12.5%. This tells us that as investors, the one thing that we absolutely want to focus on is that services revenue piece. I would actually like it if wireless equipment revenue fell, because there would be less negative impact on the income statement from those negative gross margins. But we want services revenue to grow. So what are the trends there? There are a lot of moving parts here, particularly with the company's acquisition of TracFone. But I want to look at the trends from a consumer segment and the business segment and highlight why I'm excited about what's called fixed wireless or broadband 5G wireless that's going to people's homes and businesses. Right here is the consumer operating statistics that Verizon posts. You can see here that total wireless retail connections were actually down slightly for the year, 114.5 million connections. Now that's a massive business. That's why this business is so big and so profitable. But I want you to take a look halfway down this table at Fios, which is fiber optic services, down almost 10% for fiber optic video. That's the equivalent of cable going into people's homes for video services. Now, internet was up slightly, but this is the exciting thing here to me. Fixed wireless access is what Verizon calls this. I've been using this for about a year. It's just a box that you plug into the wall. It connects to the 5G connection coming over the air, just like your cell phone, and it replaces something like fiber or a cable broadband connection. Almost non-existent in the consumer segment a year ago, 101,000 connections, now 884,000 connections. That's still just a fraction of the wireline broadband connections and only 0.7% penetration in Verizon's wireless business. So this is a segment of the business that is almost purely services revenue that is just starting to become a significant piece of Verizon's business. This could literally grow 10x and it would still be less than 10% penetrated into the number of connections that Verizon has on the consumer side of the business. So just an absolutely tremendous growth potential. And like I highlighted earlier, very high margin. And now let's look at this from the business side. This is similar numbers right here, but you can see that fixed wireless, almost as big as it is in the consumer side of the business, much higher penetrations because businesses are really thinking about these connections a little bit more, willing to switch service providers compared to the phone connections that they have about 45,000. This is pretty good penetration of over 1% in fixed wireless. And you can see here that wireline is almost non-existent in the business segment. So again, this is really a way for Verizon to offer more services to businesses. And it's going to be very high margin at the same time. So why do I highlight the service revenue margins and then the growth opportunity in fixed wireless? I think the future for Verizon is not necessarily growing the number of customers it reaches, but actually getting more revenue from each of those customers by bundling services together. If you have a cell phone connection with Verizon, now you can add in broadband and then even things like streaming. Verizon is bundling more and more streaming services with its wireless services. And again, that's going to be a very high margin business because Verizon's just going to take a cut of what a company like Disney or Netflix would generate in their streaming revenue just because they're a reseller of that service. So as we look at a company like Verizon, it's important to keep in mind where we need to focus in the business. My entire focus in analyzing this stock is on growth in that services segment and expanding the number of services that customers have. I think we've seen Verizon do a good job of slowing down the loss of customers that it had in the start to the middle of 2022. That started to reverse towards the end of the year. And then adding that fixed wireless business has just been an absolute growth boom for them. And we're just starting to see it be a significant piece of the growth story for Verizon. So that's what I think investors should be keeping their eyes on. That's what I'm going to be looking for going forward in my coverage. But what do you think about Verizon and their opportunity to grow and grow that dividend long term? Very high dividend yield. We need to keep that debt level in mind. But I think this is the kind of hidden growth story that we need to keep in mind given the value of the stock right now. I'd love to hear your comments about Verizon in the comment section below. Don't forget to subscribe to Rive Investing here on YouTube. Thank you for watching. I'll see you again next time.